fascinating look. 67.71, huge rotation into healthcare and biotech versus tech in the
Something
last
just
couple of
happened
days.
in the Fed funds futures market, which is the rate cut odds for December went below 50. So the market really has no idea what the Fed is going to do right now, and now less than a 50% chance they see it cutting.
Yeah. Let's get to the judge.
Carl, thank you very much. Welcome to the Halftime Report. I'm Scott Wapner. Front and center this hour, falling tech. That sector is struggling yet again today. We will ask the committee whether an even greater rotation is coming now. Joining us for the hour, Josh Brown, Carrie Firestone, Bill Baruch, Jenny Harrington. We'll check the markets, where the big story is the fact that we are down across the board. And if we throw up what the interest rate complex looks like, that could very well be a culprit today. No doubt about that, as we've got rates that are moving higher. Some of the Fed speak lately has been undeniably hawkish. So you have to believe that December is 50-50. But as they were just saying at the end of the program prior to this one, maybe we even dipped a little bit below that in terms of expectations for what the market is going to, get from the Fed in December. That seems to be the story today, no?
Yeah, I think it's actually part of a bigger story. And I was talking to a portfolio manager about this a couple days ago. And he was saying, welcome to the ABC market, or anything but chips. The AI CapEx story is not quite unraveling, but there are more questions surrounding it than ever before. And in the absence of any actual fundamental news, because we're already through earnings season, other than NVIDIA, people are just saying, you know what, I've made a lot of money in this trade. These stocks have gone up a lot this year, at least most of them have. And there are other things that I want to do in my portfolio that aren't directly tied to this trade. So the ABC market is in effect on a day like today, where you see a weird thing like at an index level, the market down, but actually pretty decent internals. And that's because other stocks that are not as important to the averages are actually gaining money while money comes out of that trade. Energy is a great example, and we're going to talk about a new energy name on my best stocks in the market list later in the show. But energy is now leading all sectors on a short-term basis. 100% of the sector components are above their 20-day moving average. Financials number 2, 80%. Healthcare number 3, 74%. That's where people are making money at the moment. Tech is second worst. Only 32% of tech stocks are above a 20-day moving average. Not the end of the world, but a definitive change from what we would have talked about even 3 weeks ago.
Carrie, I feel like you're going to have a pretty good battle. I was trying to pick my word. Battle in the room, in the FOMC, of what's going to happen in December. So if we take it at what the market is placing its bet on now and say it's less than 50-50, and if we don't get a cut in December, what happens to the market and the idea of an everything rally into year end, which some have been banking on and we may have had the earliest glimpses of in the last couple of sessions?
We've been hearing for weeks now that there's a split at the Fed. And every single day, I feel the Fed leaks information, or the members
they don't
are
leak
talking
it. They
about
talk about it. It's not being leaked. They're putting out themselves.
They want people to know that there's less and less of a chance. It's daily that there'll be a rate cut. I think the market has absorbed that pretty well and has begun to look at other things in order to grasp onto what is positive for the market and for shareholders. So earnings were good, and earnings have to stay good. Whether tech matters or not, of course, it's huge. Energy is a tiny, tiny percent of the S&P. What's the weight in the S&P?
It's like 3%. So
right.
Whatever. It's probably a little bit bigger than that, but
it's like a
point.
stock. It's just like half of Microsoft or less. So I feel that the movement of the rest of the market is less important than what happens with NVIDIA's earnings. Whether we start to see moving into the end of December, we don't have to have these stocks all rally. Now, they've had huge runs so far this year. I think it's perfectly natural for them to take a pause. I think it's great that the rest of the market is participating.
I know, but what about my question? I don't feel like you're getting at my question. If there's no rate cut in December, what happens to the market?
I don't think the market is going to care that much. I think the market can go down 5%, and then it would be sort of comfortable with 5%?
Where we are.
Yeah, well, that's
you mean if we don't get a
rate
cut, in December, we might go down 5%?
Yeah, on that day we might have a 5%, a 4%, 5% decline. We might have a couple more percent.
Flip the question. How many people would say that they're buying stocks right now for a rate cut? I don't know anybody.
I don't think anybody is.
No. Well, let's put it into perspective, because that's a nuanced question. If you say that in and of itself, are you buying stocks because of a rate cut? People are going to say no, because there's all these other stories, like the ones that Carrie said. Earnings are good, AI, everything that everybody already knows. However, it's one of the things that got put into the stew pot for the bullish case.
We got 2 rate cuts.
Well, the market was 100% for December. Now it's less than 50. It's just part of the story that's been out there. You have good earnings, you have big capex, you have the deregulatory environment, you have M&A, blah blah blah, and you have expectations of the Fed being your friend. Well, if the Fed sticks its hand out and then you go to shake and it says, pulls it away, how much does it matter?
But why did they pull it away? Because the labor market hasn't. Because the labor market hasn't deteriorated further.
Because inflation is a little bit stickier than probably they would like it to be. Yeah. What do you think?
Well, they haven't had any economic data with the government shutdown. I wouldn't say the Fed reluctantly cut 2 times, but Powell was getting a lot of heat from President Trump, and this gave an opportunity without economic data to really go into a pause. And the Fed doesn't want you to just to know that there's a rate cut coming. I mean, they need to balance the opinion, and that's what they've done. I think that you're starting to see a little bit of pause in the tech because of that. That may have been a catalyst. There's other catalysts out there with the OpenAI conversation, obviously other things out there that have been headwinds, the CapEx conversation, and that right here, I don't think we really need. The market is pricing in a rate cut now to a coin flip. I don't think it's a necessary thing. However, I feel pretty confident you're going to get a rate cut from them.
I mean, maybe it's necessary, if you want to use that word, for certain parts of the market, Jenny. Maybe it's necessary for the small cap trade to work, because I'll tell you what, it's not working today.
No,
down 1.75% because it's so sensitive to the rate cut question. Maybe other cyclical areas of the market need a rate cut. Ones that would participate in an everything rally if we were to get one into the end of the year. Do people think you need a rate cut for stocks to do okay? I don't think so. But if I pulled the rug out from under you on that idea, it may have a little bit of an upset because it could push rates higher, even further from where they are now, and that would change the calculus, even if it's incrementally so.
So I don't think the actual rate cut matters at all. Whether they cut 25 or 50 or whatever, that's not what matters. What matters is why. Why would we not get a rate cut in December? And if the reason that we don't get one is because the economy is doing perfectly well and we don't need one and things are maybe a little stronger, then that's great. And I think that might actually be why we're seeing this rotation today. And from my seat, we are in a serious rotation right now. So when I look at my screen, which you all know are dividend stocks with super low valuations, a lot of energy, no tech, a lot of energy, a lot of real estate, a lot of consumer staples, a lot of pharma, my screen's bright green today, which is shocking. And so what I'm thinking is this is a much bigger story. Why is tech down? And my partner Greg, he always says no one rings the bell at the top, right? So there was no bell rung, but at some point in the past couple weeks, suddenly people started caring about profitability, and suddenly people started caring about valuations. And then you look at my portfolio and I'm like, okay, what's the one thing I've got going for me? They're all profitable, they all have low valuations. So I see this rotation happening, and I do think it's interesting that small cap is down so much, because I don't know that that's telling. I really don't think the rate cut matters in and of itself. It's the why behind the rate cut.
Sure, but it matters to the Russell, as you say. By the way, the Dow, which again closed above 48,000 for the very first time ever yesterday, it's a bit below that with the 400-point decline today. As Mike Santoli was pointing out earlier today, the Dow is ahead of the NASDAQ 100 on a 3-month basis. And we had a chart to show you ever so slightly has the Dow done that, but I'm not sure how many people, had forecast that, but that's a pretty good thing if you were looking for the broadening out. Sectors month to date. Healthcare is up 6.5%. Materials are up 3%. Energy, Josh was talking about that, up 3%. Financials are up 2%. Staples are up 1.5%, and tech's down 4%.
Well, that's the ABC trade brought to life. And look, the Dow is beating the S&P 500 over the last month and over the last 3 months. And if you think about why that should be the case, or whether or not that has legs going forward, The Dow has more exposure to Goldman Sachs and Caterpillar than it does to the entire Mag 7 combined.
Yeah.
And most of those stocks are in there.
And some healthcare too. And because of the price weighting of the Dow, you're going to have that sort of impact.
Correct. So CAT is a 10.5% holding in the Dow right now, and Microsoft is 7%. Apple and Amazon are only 3% holdings. Meanwhile, Goldman Sachs is 7.5%. So I hate the term old economy because both of those companies are using a lot of AI. The companies that are not directly tied to the ups and downs of the narrative around OpenAI are just doing way better. The profitability question does matter. These guys won't stop doing podcasts and letting stupid things slip out of their mouths, guys and gals. People don't want to hear that story anymore for the time being. They don't want to hear that Anthropic won't be profitable till 2028. They don't want to hear that OpenAI won't be profitable till 2030. And they don't want to continue to overload their portfolio on the vendors to those companies. And that's why that rotation is so important for investors to understand. And the most fascinating part about the rotation, it won't show up. When you actually look at the index level, what did the S&P 500 do today? Because it's all happening beneath the surface. To Carrie's point, these are segments of the market that have shrunk in terms of their proportion as the Mag 7 trade has grown. And so now you can have like stocks that are, look at Berkshire today. It's $1 trillion market, almost $1 trillion market cap. It's a gigantic financial. It's just not $5 trillion. And so you can see stuff like this go on your screen and say, well, I would guess that the market's up. JP Morgan hit a new high 2 days ago. Berkshire's rallying. Exxon's rallying. That's not what drives the market these days. And it's a little bit disorienting for people who just glance at an app on their phone and think they have a handle on what's happening.
So let's go a little deeper here on what's been winning. And you know, because we've been talking about it a lot lately, of this healthcare trade. Biotech has been rallying after a couple of years of underperformance. It has come to life and in a big way. As I said, month to date, 6.5% for that space. New 52-week high for healthcare. The XBI is coming off a fresh high for this year. Bill, you bought more Amgen, which hit a 52-week high today. Carrie owns it in her charitable trust. Tell us more.
I think we're in a bull market, a secular bull market, and there's these ebbs and flows. Obviously, there's an ebb down in April, so things mature very fast. In year 2 of a bull market, this rotation, it's healthcare and financials that typically lead. So I wouldn't say we're year 2, but that's the narrative around it. I think that you got to lean into what's working right now, and healthcare is working. Amgen had a tremendous earnings report, 564 earnings versus 497, and this cardiovascular drug Repatha was a very positive surprise. And so there's a lot about them right now tied to MariTide, their GLP drug, and there's a lot of questions. And a lot of that was it's still unanswered, and it was sort of being able to push aside, and you were able to focus on the pipeline that they have this year. That's, I think, is really important right now. We'll hear more about MariTide later this year, but for now, this stock is in breakout. Technicals are very strong, and we want to lean into that right now.
I mean, that's a breakout, 17% in a month. What do you think?
Yeah, well, we talked about it recently, and there are 4 reasons why the healthcare and biotech stocks are going up. One is oversold. They've been oversold for years, but finally people are paying attention because they're starting to realize that the overbought part of the market is potentially too overbought, as we just discussed. It's a place to go. UNH has been a catalyst. Even though it's not drug and biotech, it has been one of the benchmarks for healthcare, and it's up 45% since its bottom. It shows that you can sort of work through your problems. So that, I think, has raised people's awareness. 3 is if you can make a deal, such as Lilly and Novo did, with the government to make things work in a drug that they're going to have price pressure down 60%, but still make it better for your profitability, why not do it? And it increases concentration in this world, and so I think that's great for the industry. And their earnings have been decent. So you've got a lot of things working for you. Why not buy low multiple stocks? So
Scotia is initiating a number of names in the biotech universe today. AbbVie outperform. 280 is the price target there. Let's try and cycle through these as I mentioned, so we can get an idea. So it's 238. They say it's going to 280. Bristol sector perform is 45. Let's look at the charts, please. Bristol again, sector perform 45. I mean, the stock is at 49, so that's why they have a perform on it. They don't love it. Regeneron also performed 650. A little bit lower than where it is now. And Jenny, you own Bristol and Regeneron, so weigh in, please.
Right. So I think they've got the wrong price targets, but the right idea. And you look at these stocks, and they're the theme that's working today, which is super cheap, high free cash flow, and a definite earnings growth story ahead. So Bristol trades, for example, at 7 times earnings with a 5% dividend yield. It's up 7% in the last 3 months. Regeneron trades at 14 times, 6% free cash flow yield, is up 23% in the last 3 months. And for Regeneron particularly, they have one of the biggest drug pipelines in the whole pharma and biotech industry. Like, that's where I want to be right now. I have a further out theme on these too, which is who are going to be some of the true AI beneficiaries where you know they're making money, where you know the use of AI is going to drop straight to the bottom line? It's the pharma companies. They're going to be able to do better research, use fewer scientists, take up less lab space. They're going to be completely revolutionized by AI. And I do wonder if a little bit of that thought is just starting to trickle in to these kinds of stocks.
I think you're right. I think you're right. I mean, I'm sure there are any number of names that would look like a Regeneron chart where you see the breakout in 1 month. This one happens to be 27%. We told you what AbbVie, for example, is doing.
Yeah, I was going to say, I have 6 biotech names on my best stocks in the market list, and we've talked about some of these throughout the course of this year. Gilead is one that we've brought up repeatedly. Take a look at this chart. AbbVie looks incredible. Alnylam, ALNY, we did a segment on that. Insmed, Natera, which I don't know very well, but like, these are stocks that are moving up and to the right in a sector that had sat out most of the last 3 years since the market bottomed at the end of 2022. Some of them even have dividends, believe it or not. And I think that list is going to expand. It's nice that Amgen is on it and Gilead because people know those names. But I may be coming back to you in a week or 2 weeks and telling you I now have 10, 11, or 12 biotech or related companies in that segment. And many of these are names that growth investors just don't know because the market hasn't given them a reason to learn.
Let's talk about financials too. Because it's becoming a bigger story. Goldman all-time high today. JPM, Morgan Stanley hit all-time highs yesterday. Bank of America's highest level since 2006 yesterday. Bill, you own Goldman. You own JPM, but this Goldman breakout, more M&A
activity,
better market environment. Bull market into the, bull run into the end of the year. Tell me more.
Yeah, I mean, like I just said, financials and healthcare, and as things mature out of April, that's where the rotation is taking place. Now, I would have put Mag 7 for dead, but right now you have to lean into what's working. Goldman, with that record high, it was up big yesterday. It was a record income from that EA deal on IB fees. Really another breakout here. JP Morgan moving great. I think these are the names that you see the M&A activity, the trading revenues are going to be good in this environment, I think, too. And it's a maturing trade where everybody's talking about AI. The financials are really going to be benefiting from AI here as this goes into next year.
You want to give me something on JPM?
I mean, JPM's had an outstanding run. I would point out the best performing stock in the S&P 500 this year is Robinhood. I think it tripled this year. Mm-hmm. Probably most people are not aware of that. They're thinking it's got to be an AI stock. And it turns out it's not. It is sort of indirectly an AI stock, though, because a lot of the trading activity on that platform is involved in people wanting to play the tech bull market. I'd also say Goldman is the second best performer in the Dow this year. How many people would have said in January that that would be the case? How many people are even aware of that right now? Not that many.
43% for Goldman. Speaking of AI and speaking of tech, Oracle is on pace for its 11th down day in the last 14. That's just an interesting move to keep an eye on.
Market cap.
It's down another, say again?
Bleeding market cap.
It's down another 3.5%. So if you back it out even further, and you can see from the big AI announcement that they had, like I think it was in September, stock shoots way up. It's round-tripped it. It's even lower now than it was, then. So it's round-tripped it and then some. UBS says we're not in a bubble. We're going to get NVIDIA in like 7 days, 6 days next week. So that's going to be a good tell. There was a really interesting story today, again related to Michael Burry of Big Short fame. He thinks we're in a bubble. I mean, I think he's made that pretty clear from his postings on social media. Something that he's done with his fund. Leslie Pickard following that money, following him, the money, everything else. What's the news here?
Yeah, Scott, really interesting timing here. Michael Burry has, as you mentioned, he's been ramping up his criticism of hyperscalers in recent weeks. And now we've learned that Burry has deregistered his hedge fund, Scion Asset Management. The SEC's investment advisor database showing that Scion's registration was terminated as of November 10th. As of March, it had about $155 million in assets. Burry's bets against the U.S. housing market during the financial crisis, anointing him as a key character in The Big Short, and over the years, his holdings and commentary have been closely followed for signs of potential bubbles and froth. In a post on X, Burry said he's, quote, on to much better things November 25th, without divulging much more about what he's doing. Earlier this week, though, he posted about how he believes the hyperscalers are understating depreciation by $176 billion over the next 3 years. Burry argues that they're extending the useful lives of assets in a way that artificially boosts earnings, 26.9% for Oracle, 20.8% for Meta by 2028, he alleges. And then he said it, quote, gets worse, teasing, again, more detail coming November 25th. So I guess we'll have to just mark our calendars for the Tuesday before Thanksgiving, Scott.
We are already. We'll see. We'll see what happens. Leslie, thank you. That's Leslie Picker.
Family office or active ETF?
I don't know.
Place your bets.
I don't know. Yeah. Let's talk about NVIDIA, which, by the way, is down 8% this month. Target raised today at OPI 265. It was 225. Target raised at Susquehanna 220. Was 210. Reiterated buy at Citi. The target is 220 there. Retail continues to like it. If you look at a robust retail buying activity, of course, NVIDIA was on the list, positive by $1 billion, along with the other names like Tesla, Meta, AMD, Oracle, and Apple. CoreWeave, obviously a favorite name there, too. Cisco, 52-week high on its own earnings beat. Jenny Harrington owns that name. Tell me more.
All right, so Cisco, our thesis here has basically been any version of technology that expands needs to use Cisco's products. So you've got a stock that's relatively cheap compared to the rest of their peers, free cash flow generating, decent earnings growth ahead. It's not, it's never going to be one of the triples or the quintuples, but it's what we want in our disciplined growth strategy that just focuses on free cash flow. Nothing too exciting.
Well, it's a 52-week high.
Yeah.
They gave a strong guide. Why aren't you more excited?
Because
that's not the reaction I was expecting from you.
Well,
maybe I shouldn't even have had you talk about it. Like, what's up?
No, I think it's just that we've had it for so long, right? And it's had a very steady long-term growth profile on it. And no one was excited about it for a super long time. Everyone was just like, oh, Cisco's dead, Cisco's old school. The numbers aren't extraordinary. They're great, but they're not extraordinary. You've got like 8% revenue growth, 10% EPS growth. That's great, but it's not 150%. It also trades at a totally reasonable 18 times valuation, 6% free cash flow yield. That's what I want to own, but it's not the kind of thing that makes you jump up and down.
Well,
and so I think it's all about managing expectations. And one of the problems that we've seen, and the reason that we see NVIDIA down 8% and we see Oracle off its top, is because people got hooked on the story in a really irrational way and lost sight of what do they really do? What do the numbers really mean? And what should what should the performance be? So if you can keep your kind of wits about you and stay rational in expectations, then you get a nice return. So that's why I'm not super pumped.
If you're down on, I got it. If you're down on Cisco, I can only imagine how you feel about Disney.
I'm not down on Cisco. I'm like, hey, that's great. Disney, I think, is a stupid reaction. Disney, here you've got 19% EPS growth year over year. You've got a stock that's trading at 17 times, so a huge discount to the market. And you know me, I'm super long-term focused. So when I heard that earnings call, the thing that I heard primarily is we will have double-digit earnings growth next year, 2026 and 2027. That sounds great to me. I don't really know why this is such a negative response. I bet
Well, their revenues missed, and you got nothing on Succession either. Maybe people are just getting tired of waiting.
Okay, but they also raised the dividend. They announced a $7 billion buyback. The fundamentals and the numbers of the company are terrific. Streaming was up 8%. Streaming revenue was up 8%. So I thought it was a really good quarter. I'm going to bet you if the market weren't so ugly today, it would probably be down like 2%.
Hey, Jenny, they're getting manhandled by Alphabet, and that is, unfortunately, setting a precedent where people are looking at these media and content-rich assets and the companies that own them as being susceptible to Mag 7 platform risk. because if they can't get their properties back up on YouTube TV, which is only 10 million users, it doesn't augur well as a sign for the future of what that program and content is really even worth.
Okay, I mean, that's a much bigger conversation, Josh, and I've been looking at Comcast for the dividend portfolio, and so you really need to think about what is content worth in the future broadly, how ubiquitous will it be, how much is it going to be taken over by AI. This is a little bit of a non sequitur, but one of my friends posted the craziest thing on Facebook. She made an anniversary video of her and her husband using Sora. It's extraordinary. It's hilarious. It cost her nothing to make and took 10 seconds. So content overall, that's a bigger conversation, but the numbers for Disney today don't justify a down 10% move on, or 9% move on.
We feel richer for hearing about the non sequitur. I do.
mean, if I could get her blessing, I would post it broadly.
Follow Jenny on Facebook.
By the way, I mean, the vote to put Nelson Peltz on the board, put Trian on the board of Disney was back in April, and they bounced at 119. I wonder if you have any regrets as a shareholder that he's not on the board.
Maybe. Scott, I never have regrets. No, just kidding. No.
Do you have a non sequitur that would play into that question that I asked you?
Probably, but it's going to take me too long to come up with it. Give me like 15 minutes.
I'm serious about the question, though.
I don't know. I don't know if Nelson had been on the board, would they have had a speedier and more serious succession plan in place? I'm not sure. I think this is really tough. And I was just talking to Gary Stern, actually, who was on the show before, and I was saying, when you get to that very high level of CEO, the air gets really thin. And there's not that many people available for the jobs, and there aren't that many jobs available, to the people who want them. So I think this is a particularly difficult succession situation. I don't know how we get through it. I don't know that Nelson really could have improved it.
They said it would be this first quarter of next year.
Yeah, no, but I know, but I don't think there's, as Jim Stewart told me yesterday on Closing Bell, there just doesn't seem to be any insight into who it might be. That nobody from the outside seems to be, talked about. Could they go to a co-CEO situation? He raised that point, not me. Could Iger, under that scenario, stay on as chairman? He raised that, not me.
Because they said it's internal. They said it's internal, so they must know who the people are. It's all.
Well, anyway, the stock's down 9%. Up next, our calls of the day. Josh Brown is back later with his best stocks in the market list as well. All right, welcome back. 12:30 in the East. Dow is down 400 points today. We're down across the board. Let's do our calls of the day. We're going to start with Booking Holdings. It was upgraded today to outperform at Wedbush. They maintained their price target of some $6,000. Carrie, you own the stock.
I'd love to see $6,000.
Bet you would, because it's at 5,100.
Yeah, it's been a great stock. In fact, we sold a little bit of it. I talked about it a month ago because the travel business has been fantastic since we came out of COVID. Do people have enough money to keep spending at the pace that they have? That's debatable. We still like it. We still own it. Love to see 6,000.
Do you have any anecdotal things you want to talk about of anybody booking their dream trip?
Taking the train back to
like
Boston later.
I do. This and every other travel stock now has the same chart, which is a rounding top. This is now below both its 200-day and its 50-day, and it looks like a lot of hotel chains and a lot of airlines. And I think the travel comps going into next year, pretty much impossible for any of these companies to be putting big year-over-year numbers up. So I'd be really careful buying into these downtrends for the time being.
Your reaction to that?
He's got a point, right? Josh always has a point. But as I said, we sold some of our position. We still believe in the stock longer term. If it has a tougher year next year, I don't think it's the end of it.
Up high, Firestone.
Yeah,
All right. Rocket companies. Initiated outperformed $25 at Oppenheimer today. They say it represents the best way to invest in residential real estate as rates fall and drive refinance demand. Josh Brown owns that name.
People don't understand. It's going to hit them over the head like a hammer the minute we start to see a lot of the enthusiasm of the stock market all of a sudden transfer to the real estate and housing sector as rates come down. The pace of rates coming down is painfully slow, and mortgages don't trade off of Fed funds rate overnight money. Mortgages trade on the 10-year, and that's coming down even slower. So that's what's holding up this moment where all of a sudden homes become sellable again and that market redevelops. But when it does, it will become apparent the acquisitions that Rocket has made, the mousetrap that they have built, represent the first ever version of a soup to nuts, full funnel housing market purchase experience on one app, and I think they run away with it. So that's the bet that I'm making here in Rocket. I'm not trading and I'm investing in it.
All right. I want to see what Jenny's got for me on Verizon.
Okay.
The target's set at $49. It's a buy at Argus. There's an announcement today, or the Wall Street Journal anyway, is reporting that they're going to cut around 15,000 jobs. You own the stock. You know a lot of people who make phone calls. They probably have Verizon as their service on their phone. What do you got about this stock?
Okay, so first, the numbers are compelling, like we've been talking about all day. It trades at about 9 times earnings, has a 7% dividend yield. So that alone, works for me. They bought Frontier, which helps them move into the suburban areas in a really strong competitive way. With respect to the job cuts, it reminds me of what happened at UPS last month, where UPS cut 48,000 jobs. And it's one of those things where, as a human versus a portfolio manager, you have a conflicting thought, which is, as a portfolio manager, fantastic. That drops to the bottom line. I think there's been a lot of overhiring, overcapacity over the past 4 years, and so we're seeing that. I don't think this is really AI related in any way. From a human perspective, when you keep seeing these job cuts and you think about 15,000 people who are going to need to figure out a paycheck in the next few weeks, months, 48,000 at UPS, it gets a lot harder. That might not be so economically great on the broader picture. So when we think about consumer names, then I trickle into that and start to worry that people are losing their jobs, and it's tough.
Quickly.
But as a portfolio manager, super compelling.
Stock's been $41 per share since 1998 when I was listening to Lit and Tonic.
Here we go again.
I'm just saying, what breaks it out of this paradigm?
We've talked about this so many times. Your starting point.
Pull the 30-year chart.
Okay, but here's the thing.
No one has a 30-year chart.
We have a 30-year chart.
Yeah, but did you buy it 30
Guys, do we have a
years ago?
30-year chart?
No, did you buy it 30 years ago?
If I did, I would have underperformed the checking account.
Okay, how about this? How about simple compounding? Even if the shares stayed at $41 for 30
Which they
years,
will,
and you got 7%, you're doubling your money every 10 years with a tax favorable advantage to the income.
Does anything
bam.
Does anything break this out of that paradigm and make this a stock worth owning?
I mean, I've said this all along. In my dividend portfolio, I look at it as better than a bond and as a stabilizing, hey, it's going to be there through everything. I don't know. It's tough. Maybe if we continue to see this rotation and people start to say, for something that has single-digit earnings growth, trades at 8 times, it deserves more than an 8 or 9 times multiple. It deserves a 10 or 11. That breaks it out, but I don't think there's any huge growth profile.
Was the BAM, were you channeling Emerald, or was that your version of a mic drop?
I don't know.
Do you know Emerald? You know
yeah,
who that is?
I know. Bam! Right?
No,
Yeah.
that's not working for me, dog.
All right, Josh Brown's best stocks in the market.
Woo!
The spotlight is shining brightly
Bam.
today.
Let's do it.
On?
Well, we talked about energy in the A block. I think we did a pretty good job of covering the fact that those stocks were going up, and I want to show you one. This is ExxonMobil. Most of you have heard of this name. Here's what's happening. There are some stocks that move very quickly back and forth. They're in an uptrend, they're in a downtrend, and then there are oil tanker stocks that it really takes a lot for them to change direction. But once they do, they could run in that direction for a long time, and you want to be on the right side of that trade. ExxonMobil has been consolidating since 2022 around these levels and is now hitting the upper end of that range. $125 per share would be the real trigger. I'm actually making the case that investors can anticipate that breakout getting long here. I think you're buffered to the downside by 2 things. Number 1, the dividend yield. But number 2, very low expectations. This is a really interesting scenario, Judge, where the fundamentals for Exxon are now bottoming, will be improving in 2026 based on what management said on Halloween when they reported earnings, and the technicals are lining up at the same time. So this is a company that returns a ton of capital to shareholders. They've gotten very efficient with oil prices down here where they are for an extended period. God forbid they get a little bit of help from the commodity price side. Now that they've got their costs as low as they are, this could be an upside surprise after upside surprise situation going into 26. I think it will break out, and I think this is one of the best stocks in the market for that reason.
I would add that even though crude oil fell out pretty hard below $60, refining margins are improving drastically, and diesel margins back to 2024 highs. Those are really great for names like Exxon, also into names like Marathon Petroleum.
But Exxon's the one that you choose out of the group.
Yes, we own Exxon. It's a core holding of ours, right outside the top 10. It's starting to wake up a bit. I see myself potentially leaning into this into the end of the year.
They also have a growth catalyst here with the Golden Pass LNG business, which they're partnered with the Qataris on. But this is export LNG, which is obviously a growthier business than just refining or exploration. But there's like a lot of things happening here that have been overlooked by the market because nobody wanted to talk about energy stocks and be in them. As I mentioned, the sector is starting to outperform, and as that process takes place, people will look at the blue chip names within the group like Exxon and maybe even do a double take on how low the expectations are going forward.
Even SLB's off the lows.
So I want to say in our portfolio, in the equity income strategy, I've got a 21% exposure right now to energy. And part of that's because that's where I can find
big dividends.
Yeah, big dividends. But I also have it in there much more strategically. And the strategic play is, as there's data center build, this is an area that I know for sure will benefit. And so, Josh, when you're saying 2026, I think the story for energy will be far longer than that, maybe the next decade or so. There's a great book by Dan Yergin called The New Map. And one of the things he says is, as we enter the next decades, we need every bit of energy however it's generated. We need every bit of solar, we need every bit of wind, we need every bit of oil, gas, everything. The pipelines and the energy companies are going to produce it and bring it to those. This is one place you're going to make money.
Well, can I throw one more name in there?
Better be quick.
Kinder Morgan, to ride off what she
Kinder.
says. Yeah, we're about 7% energy. I love that name. 40% of the natural gas that's consumed in the U.S. goes through their pipelines.
Okay.
Yep, they've got 79,000 miles of pipeline.
We're going to have to leave it there.
Thank you, Ross.
I thought we made that obvious, but maybe not. We'll take a quick break. All right, let's do some final trades. Jenny Harrington, you're up first.
Okay, Kimberly, still oversold after the Chemview announcement, 15 times earnings, 5% yield.
All righty, thank you very much. Thermo Fisher, who's that?
It's me. TMO. It is driving this healthcare move here. I think it keeps on going, gets out above 600, and could really get in breakout territory.
Wabtec.
Wabtec's mine infrastructure play. Rails, rapid transit sells below market multiple.
Thank you. Berkshire Hathaway.
That's me. Back on the upswing after a whole slew of Wall Street commentary. This name is trading higher in a red tape, and I like it.
Okay. This looks like it's shaping up to be one of those days. A lot of red on the board right now with a few hours of trade obviously still to go. The Dow Jones Industrial Average is down about 500 points. The exchange is now.
Hello, everybody. Welcome to Blue Cloud Trading. I'm George. It's Thursday, November 13th, and the market has closed. It is currently 5:58 p.m. as I'm recording this video. And in this segment of the video, we're going to go over the market. We're going to also take a look. As you can see, all the indices were down today, but we'll look at those in a second. We're going to take a look at a number of ETFs, like the S&P 500, the NASDAQ, the QQQ, the Russell 2000, the VIX. We'll look at about 18 stocks that were discussed on the halftime report earlier today. You saw Josh Brown and some other guests there. We'll also cover Apple, Tesla, Meta, Microsoft, and about 20 ETFs here. Look at all that red. And we're going to look at the charts. We're going to take a close look and see how the, what they look like technically using the Ichimoku indicator. And I'll give you a brief summary about that as well. So let's get started first by let's see what happened. I mean, you can see the markets today, this morning, they basically gap down slightly, right? They held for a little bit, and around, I'd say 10:30 or so, it just started to drop, and it did not stop dropping. You see that downward channel there. It was the Dow Jones was down 1.65%, down the least. The NASDAQ also gapped down, okay, held up, and then around the same time dropped, down 2.29% today. Big drop for the NASDAQ. S&P 500 did the same thing, okay, down 1.66%. And the Russell 2000 gapped down and just continued to drop 2.81. It was actually down the most. So, yeah, not good. Let's look at the heat map. All right, here are the individual stocks within the S&P 500. And as you can see, pretty much the majority, all the semiconductors here in the S&P 500 were down. A lot of the software companies were down, except for Cisco, which was up actually 4.62% today. Look at the financial stocks. Took a big hit, and Berkshire was up 2.13%. The healthcare stocks were mixed. The energy stocks were also mixed there. You can see Exxon and CVX were up. Costco was up, but Walmart was down for the consumer defensives. The industrials took a hit today. Real estate, utilities took a hit. Basic materials were mixed. And look at the big names like Amazon and Tesla. Tesla was down 6.64% today. Google down 2.89. Amazon down 2.71. Yeah, some big drops here. Broadcom down 4.29 and Oracle down 4.15. Palantir down 6.53. You know, when you look at this as a daily, from a daily perspective, it can look pretty scary. But if we look at this on the one weekly, based on the weekly performance, all right, not so bad, except for a few of the stocks, as you can see here. Like Tesla down 9.85, Oracle's been down a little over 10%. Now, the good news is that going into this coming week, all right, we have to just wait and see what happens on Friday. What are the technicals going to tell us on the weekly charts? Because the weekly charts are starting to get weaker, except for the Dow. Now look at the Dow on the weekly chart, still holding up above the 9 period. Very briefly, let me just tell you what this indicator signifies. You've got the green line there is the 9 period. It's the midpoint of the last 9 periods. The red line is the midpoint of the last 26 periods. We want price to be above both of those. The midpoint of these two moving averages is the Senkou span A. It projects 26 periods into the future. So that's the first part of the cloud. Then you've got the purple line there, the other part of the cloud called the Senkou span B. That's derived by taking the midpoint of the last 52 periods. And instead of projecting it under the candle, it projects it 26 periods into the future. And then finally, the last part of this indicator is the Chikou span, which is today's. In this case, it's a weekly chart, but it would be the closing price at the end of the day. All right, projected 26 periods ago. And what we want to look to see is if that white line is above the candle 26 periods ago. If it is, it's still very bullish. All right. I also use the directional movement index. I've got it at a setting of 9. As long as what we want to look for here is the green line to be moving up, red line moving down. We want the green line to be above the red line, and we want the white line to be moving up as well when the green line is above the red line. We don't want the white line to be moving up. The white line is the ADX9. It represents momentum. If that starts moving up while the red line, as you can see here, is above and moving up and the green line is below it, that's a big problem, because if we go straight up, you can see what can happen, right? You can have a big drop, and that drop in particular there dropped about 17% or almost 16% in 1.4 months. That was this is a weekly chart we're looking at. But the opposite occurs when the white line is moving up and the green line is above the red line, as you can see right there. So if I just, again, let's throw that arrow right there. You can see if you go straight up, you can see how it led to a nice move. When the momentum starts to be lost, you'll notice that the ADX is dropping, like you did right there for a short, brief period of time. It started moving back up again. But my point is, when the ADX is dropping, that means the momentum is coming out of the market. All right, so the Dow Jones, this is what it looks like on the weekly chart. It still looks very bullish on the weekly chart. Okay, here it is on the daily chart. Now, it was down 1.66% today, but it held up and actually closed above the Tenkan. So I do like the Dow still, but it did drop quite a bit. It was a big drop, and the other indices look a lot weaker. So let's, except for the FEZ. FEZ Eurostoxx ETF, yes, it was down 0.76%, but if we look at the trend lines here, you can see it's still holding up above this prior high, okay, of the 63.70 level by literally 2 pennies. So it stalled right there. And you can see a little bit of buying happening. I don't know if you can see that wick right there at the bottom. If we look at the 5-minute, just that last around 3 p.m., the market moved up slightly. That's the wick. So I'm still, very bullish on FEZ as well. This is the weekly chart, okay? It's right now just kind of consolidating. S&P 500 on the weekly chart still holding up above the Tenkan. That's a good sign. So tomorrow, if we have a reversal and the market starts to get bullish again, we might just see it bouncing off this level. On the daily chart, it did close under the 9 period, and it stalled at the Kijun-sen, the 26 period. So we'll see again what happens tomorrow, but it did stall, and that's a good sign for the S&P 500. Now, this is where I'm a little bit more concerned, though. The Qs, the QQQ ETF. If I take away these lines for a moment, you can see that it closed under both the moving average, the 9 period and the 26 period, and it's still continuing to drop. So it was down 2.04%. You know, it could potentially drop some more tomorrow, and but it should find some support around the cloud or the low of that hammer candle. If you look at the weekly chart, you know, we're technically right now we are under the Tenkan-sen, but we have to wait, because when you're looking at a weekly chart, you need to wait until Friday in the afternoon to see where that candle is. Is it going to close above the 9 period, or will it close under? If it closes underneath, is a higher probability next week that we'll see a continuation to the downside, and the QQQ could drop another 6% or so. Okay, that's just based on the analysis I'm doing here with Ichimoku. It's just basically a reference point, and it's all based on mathematical plotting, so we can kind of get a better sense of where we are. Here's the Russell 2000. Now this looks the weakest, and it's very evident on the chart. Look at this candle. Okay, look at the size of that candle. Look at the volume down below increasing. Now, remember what I said earlier about the directional movement index, how we don't want to see the red line moving up and the green line moving down and the ADX moving up. Well, that's what we've got right there. So the momentum is increasing to the downside. So the Russell, not looking good on the daily. Let's look at the weekly chart. 2 weeks now in a row where it's underneath. Now, some people theorize that the Russell can sometimes be a leading index. And so let's hope that's not the truth, because if it is, you know, these are smaller and mid-sized companies, right? It could be sort of like that canary in the mine, you know, it's going to give us a little warning. So we should be very cautious at this particular time. Here's the VIX spiking a little bit, up 14.2%. Let's look at the daily. There it is. So this represents volatility and fear in the markets. And you can see that big jump. It got back above the 200-day. It got back above the cloud. It was inside the cloud the last 3 days. So that's not a good sign. And the directional movement index is moving up, and the negative DI is moving down. So that's, you know, that's not good. Positive DI9, I mean, is moving up, and negative DI9 is moving down. So that's not a good sign. All right, let's see. So there's the, you know, just a quick synopsis of the markets. Now we're going to look at the individual stocks. I did put a blue flag here for these 4 stocks out of the 18 that we're going to discuss in this video. And the reason I put a blue cloud is, I'm sorry, blue cloud. A blue flag here is to signify the fact that both on the weekly chart, we've got a bullish chart here where, again, the Senkou span A is above the Senkou span B. The cloud is still bullish. Price is above the cloud, right? The green line is above the red line. That's bullish. And the Chikou span is still moving up for Amgen on the weekly chart and on the daily. So if I got confirmation on both time frames, weekly and daily, you'll notice that these stocks or ETFs, whatever I'm covering here, will have a blue flag. Okay. If they don't, they're going to be looking a lot weaker technically on one of those time frames, and I'll explain as we go through it. All right, so Amgen. Now, the one thing I would say, yes, it does get the blue flag because it meets all the criteria necessary for the Ichimoku to be a strong bullish trend. The only problem here is we need to delve a little deeper into the actual candles. This is a shooting star. That was a negative reversal candle, and so is this one. The probability that the price is going to drop tomorrow is higher, significantly higher. And yes, it is in the healthcare sector, and it's one of the sectors that has been doing pretty well. But I'm just saying, be very cautious here. If the market rallies tomorrow, it's a different story. You know, we can say, all right, well, it didn't materialize. We can cancel it out. Not a big deal. Its price is going to just continue moving up. It doesn't always, all right, when you get a reversal candle, does not always mean that it's going to drop. Here's a reversal candle right there. Okay, that's a red spinning top. Now, if price had gotten under the low of that candle, that would have been a problem. So what I'd be watching here is to see, is price getting under the lows here? If it does tomorrow, it's more likely to drop. And if it does drop, it's most likely going to reach the Tenkan-sen, which is about 5.5% away. Okay, these moving averages. So just giving you a heads up. Alrighty, let's take a look at Goldman Sachs, GS. That one also dropped, right? So what happened today was price gap down. Okay, right there. So it opened right at this level here and then dropped, but found support at the Tenkan-sen. And so we're still technically bullish with Goldman Sachs and the weekly chart. But, you know, this is a reversal candle. It's holding up above the Tenkan-sen. We need to see strength and bullishness tomorrow. Eli Lilly, on the other hand, okay, check this one out on the weekly chart. Looking great. All right, this is a great chart that we're looking at here. Oh, let me throw yeah, I've got some notes, and I also have some trend lines that we can look at. So this one is hitting all-time highs. It actually was one of the stocks that I recommended in the members only video this last weekend. So consider becoming a member by hitting the join button on my channel, and you'll be able to access those weekly weekend videos where I go over my entire portfolio, and I give 20 new stock recommendations each weekend. And I'll talk about that at the end. So Eli Lilly breaking through the 972.53 level. And here's a daily chart. So it looks really strong. I like it. What am I concerned about is the fact that it's kind of taken off like very quickly. And when price moves that quickly and it's this far away from the moving averages here, you start to like think, okay, this thing might start to lose some steam. And if we look at the ADX, we can get a little bit of an insight. Now, it has not lost steam. You can see it's still moving up, but it has been bullish for multiple candles here. Let's hope it can continue moving up. TMO, this is Thermo Fisher Scientific. This is the diagnostics and research industry, and we've got a gravestone doji is what that's called. So it's when you see a wick like that one right there in a very, very flat body. Let me get rid of that line for a moment so you can see it more clearly. That's a gravestone doji. That's a reversal candle. Now, it does not mean it's going to turn into something because it is stalling at the Tenkan-sen, but it was down 1.34%. It held up above that prior high. We got to wait and see what happens tomorrow with this one. This is what it looks like on the weekly chart. AbbVie on the weekly popped above the Tenkan-sen. Okay, so technically on the weekly charts, AbbVie looks great. There's nothing really wrong here with this in regards to the Ichimoku indicator. If we switch it to the daily, however, okay, we've got a few things. We've got the Senkou Span A under the Senkou Span B, and we have a shooting star candle that just formed today. That's a very, negative candle, and there's a higher probability tomorrow that's going to pull back. No guarantees. The Chikou Span is just barely above the candle right here. So it's looking, it needs some work. Basically, I would not be jumping into this one. That's why I didn't give it a blue flag. All right, let's keep going. Like I said, the rest of these that don't have blue flags are not going to look particularly great. Look at Booking Holdings, for example. Perfect example. You can see that it's been in a decline. It's in a downward channel. It's currently under the cloud. And that's the cool thing. Visually, Ichimoku stands for at a glance. So at a glance, you can quickly assess whether your stock is strong, meaning it's above the cloud, moving up, or it's under the cloud and it's in bearish territory, hitting lower highs, right? As you can see there, stepping down lower lows. And now we've got ourselves another pattern, negative pattern here called a dark cloud cover candle pattern. See those two candles? Notice how price gapped up, okay, right there, and then dropped. So it's almost like hovering above like a dark cloud above this candle. All right, that's a dark cloud cover pattern, and it is a reversal pattern. So there's a higher probability, no guarantees, but just a higher probability that price is going to move down tomorrow. It shows us that there was some strength early in the morning. Okay, it hit the 200-day moving average, that dotted yellow line, and the sellers basically decided to start shorting it and selling it some more. And they did, and they got under the Kijun-sen, the 26 period, but held up above the Tenkan-sen. There's a higher volume right there too. And like I said, it's under the cloud. I'd stay out of that one. All right, BMY, Bristol Myers. Well, today and yesterday, it touched the 200 declining, simple moving average, that dotted yellow line there, and it's reversing, right? So we've got a spinning top, a shooting star. If price gets under, the low here, it's higher likelihood to drop some more. Maybe it will stall at the Tenkan-sen. Okay, we'll see if we get some more, if we see the market rally. You never know, right? We really never know. It's like a day-by-day basis. We have to observe what's happening. But on the weekly chart, if you look at Bristol Myers, it looks still very weak. I would not recommend getting in here. It's under the cloud. Okay, let's take a look at Berkshire. So Berkshire is starting to look pretty interesting to me, actually. recently. And I'll tell you why. A couple of reasons. Well, if you look, okay, there's a low right there. And that low is actually higher than this one. So we've got a higher lows. Here's another low that's higher than the prior one. So that's a good sign right there. We're in this upward slope, okay? We took out today this prior high. Berkshire's looking interesting. It will find resistance around 539. Actually, maybe a little bit slightly higher. Let's see what the candle there is. 542.07. So let's fix that. Let's make sure we get the exact amount. Okay. And so that's where you may find some resistance, and it might stall at that price level once it reaches it. How far are we from there? We're about 5.2% away. What's happening with the cloud itself, though? Well, a couple things. We're not quite at a bullish territory yet on the Ichimoku because the Chiku span is still technically under the candle, that white line that you see right there. The good news is price did break above on the weekly chart last week above the cloud, and this week it's continued to move up. The Tenkan-sen crossed above the Kijun-sen. That's also a bullish situation. The directional movement index became positive here, but the ADX is still moving sideways. And the cloud itself is almost there too. You can see that it's very, very flat right now, but if the single span A starts moving back up again, we might see a continuation to the upside. That's the weekly chart. Here's the daily. So you can see that how the faster moving average, faster time frame, the daily, which gives us day by day candles, is telling us, yeah, we're already like sort of looking more and more bullish. The cloud hasn't turned bullish yet. Single span A is still technically under the single span B, but we did also, you can see more clearly how price has broken through these prior highs right there. Disney dropped 7.75%. So on the weekly, now, if you were just trading this on the daily chart, you might have said, oh, price broke through the cloud. I think I might buy it here, potentially. But it wouldn't have made sense to do that. And the reason is because if you look at the weekly chart, okay, you can see that we've been under the Tenkan-sen here for multiple weeks, right? Going all the way back to August 1st of 2025. Now, the cloud is still bullish, but price is under the moving averages here in the weekly chart. And on the daily chart, you can see, boom, it dropped today. A big drop, 7.75% for Disney. All right, so I'd stay out of that. Robinhood is also not looking particularly great here. Last time I had a position in this, I added a position in September 29th. I got out on October 6th for a 22.1% profit. This stock moves a lot. It's got a beta of 3.81. Okay, and so, you have to be a little bit faster to exit positions in stocks that are this volatile, in my opinion, because it can drop a lot. Like, I'll give you an example. Like from the high there, the price has dropped 21.2% in a relatively short time. That's October 6th right there. Okay, so since October 6th, it's dropped about 20+%. Right now on the daily chart, it's under the cloud, and like I said earlier, you don't want to be adding positions when you've got a scenario like this happening, negative DI and positive DI moving in the opposite direction. That's not good. There's a weekly chart. 2 weeks in a row now, we're under the 9 period too. So I'd stay out of that one. JP Morgan, this one is still holding up okay on the weekly chart. All right, it's above the Tenkan-sen, Kijun-sen, and the cloud. On the daily chart, however, today was a big down day. It was down 3.41%. And so, the last time that we got under the Tenkan-sen back here on October 1st, that led to a drop of, let me measure that, about 6.5% right there. It's recovered, and now it's dropping again. KMB, Kimberly-Clark, has been in a decline. Look at this one. Let me throw the weekly on there so you can get a better picture. So each one of these bars represents 1 week. So multiple weeks now that we've been in bearish territory. The last time it might have made sense was back here to have a position back in May 30th. But since then, the price actually dropped 27.54% once it started to lose its, or maybe even here, May 30th, since that point, it's dropped like quite a bit once price started dropping under the cloud. KMI on the weekly chart is inside the cloud. I'd stay out of that one too. You can see it's still in decline. REGN, Regeneron, that one's inside the cloud. It's starting to show some strength here, but it's still under the cloud. I'm sorry, inside the cloud and under the 200. On the daily chart, we are looking more bullish. All right, so it's in the beginning stages of emerging, because it is in the biotech industry. And like I said, in this particular industry, yesterday I was talking about biotech looking pretty good. It's still looking pretty bullish. Here's the weekly chart. I think that, when it comes to why this specific industry, why is this doing well? I think when big money has no clue where to put their money, I think this is like their one place. It's almost like a place to just throw their money into, just to see, especially if it's been hit after a long period of time. So biotech is one of those few areas where they might put money in, and that's why it's doing pretty well here. It's just something I've noticed when the market starts to decline, or there's a potential of a decline in certain sectors. That it seems to me always it's like biotech. I don't know if any of you guys agree with that. Maybe let me know in the comment section if you've noticed that. Rocket companies. Okay, so this one here is under the cloud on the daily chart, and on the weekly chart it is not looking that great either. It's under the Tankinson and Kijinson. UNH. Still under the cloud on the weekly. I'd stay out of that one, obviously. Verizon is under the cloud too. Stay out of that one. It's also under the 200-day. And this one here has dropped from the highs back in 2021. It's dropped about, at one point, it dropped about 50% in 2.9 years. And right now it's down about, from these highs in 2021, it's down 34% still. So WAB. Westinghouse Air Brake Technologies in the industrial sector. It's railroads. On the weekly chart, we're above the moving averages, but the faster one is under the slower one. That's not a good sign. And then the Chico span is still inside the candle here. So I would wait until price breaks above that 216.10 level. That's the prior high up there. I also made a note here that on the weekly chart, we might have a possible head and shoulders pattern that's forming here. And I'll explain what I mean by that. If you look real close, I'll show you what that would look like. So imagine this is the head, and this is the shoulder, and this is the second shoulder. Now this will only apply if price continues to drop here. Has not happened yet. If price drops down, then we will have a head and shoulders pattern, and that's obviously a reversal pattern, right? It's a toppy sort of scenario. And why is that negative? Because if you look at it, you can see that there's the highest level, right? And then you've got yourself a lower high, the first lower high, and then price drops. That's not good. And if you start taking out some lows, then you're in trouble. Okay, so that's that. Let's take a look at the Mag 7, some of the Mag 7, not all of them. Apple on the weekly chart still looks very bullish. Okay, we've got a bullish chart here. On the daily chart, looks okay. It was down 0.19%, but holding up pretty good. It looks like it's been stalling now for a couple of weeks, though, in this range, as you can see right there. Okay, so that's something to pay attention to. Tesla, it took out this low, these lows here, right? So that's a problem, and it came down with force, down 6.64%. Look at the volume over here, higher, right, than the prior 2 days. And yeah, there's a little sell-off taking place there with Tesla. Now, I talked about this trend line based on the weekly chart for a little while. I basically took a trend line, drew it from that high to that high, and I said, well, this thing might start to get bullish. The price was above the Tankinson and the Kijinson and everything else on the weekly chart, but once this trend line was created, you can see how price stalled there, stalled again, and then it's dropping. And that's what can sometimes happen. All right. So it's not looking particularly strong here. Meta continuing its downfall. I've been not recommending this for like a long time now. And like I said before, you had that first, decline right there, that first lower high. Then you had another lower high, right? And then you took out this low, and now it's dropping some more. And we don't know when this is going to stall. Maybe it will stall here. I mean, there's a hammer. So that sometimes those can be that reversal pattern, but I wouldn't bet on it. You know, you can have those all the time. You can get hammers and then they don't pan out. Microsoft under the cloud, under the Tenkan-sen, dropping some more. You can see how it stalled. I talked about this yesterday, how it came up. We created a hammer candle. This is actually called a hanging man, that little candle right there. And that's also a reversal pattern. So you don't want that. And it's continuing to drop now. So let's see what happens with Microsoft. And then I'm going to go through these very quickly. Well, so these are the sector ETFs. And let's take a look. XBI is biotech. As I said before, this has been looking pretty strong. But even biotech took a hit today, down 1.93% as an ETF. It dropped back under the 113.21 level that it had broken through. So that's a little bit concerning that even biotech got a little bit hit today. Not all the biotech stocks, but this one did. It was down 1.93. Okay. XLE, energy ETF, still dropping after that trend line was hit there. It's staying above the cloud, but it's up 0.25%. These get a blue flag because they look still bullish on the daily charts and on the weekly charts because the price is above the cloud. But yeah, it's not looking particularly great here. I don't like these candles that are forming. XLV, we get a shooting star. That's a reversal candle. So, you know, healthcare has done really well, but this could also, this candle here could hurt even the healthcare sector. The fact that it's formed, that long wick that you see right there represents a lot of selling that took place. Okay, we're looking at a daily chart today, and it happened in the later part of the afternoon. It's kind of interesting how you can tell that just by looking at the candle itself. So remember, this is the opening price right there, 9:30 a.m. That's where the body, if it's a green candle or a light, like in this case, that light color, blue color, it's a bullish candle, right? So the body represents 9:30. The closing price of the body is 4 p.m. This represents how much buying took place throughout the day, bringing the price all the way to the high of that wick. So if I show you the 5-minute, we'll be able to see that sell-off that happened in the afternoon. So let's look at that. There it is. So it's kind of cool. You don't really need to look at the 5-minute charts necessarily to get the gist of what transpired throughout the day, just by understanding how to read these candles, because they tell you so much, right? So we can see that big jump, and then we can also see how, yeah, it moved sideways, but then we had that sell-off in the afternoon. And we can see the specific times that happened if I zoom in a little bit. So you can see right there. So it was like kind of consolidating, stayed up there. It did not break. It basically reached this high from 10 a.m., stayed there around 12:30, and then boom, it dropped, right? Got under the, remember, Ichimoku can be used on multiple time frames. So you can see how the weakness started happening when price first got under the Tenkan-sen, then it got under the Kijun-sen. So now you got double confirmation of weakness here. And then it continued to drop, entered the cloud, came back, retested these moving averages, dropped, tried to break through here, was unsuccessful above the Tenkan-sen, dropped some more, moved back up a little bit, touched the Tenkan-sen, dropped some more. So you can see how like beneficial this could be, even on if you're day trading, you can utilize the Ichimoku, all right? And what happened? Once it reached the 200-day, even on the 5-minute chart, what happened? It found some support, all right? It stalled right there. So it's very interesting. SLV, let's look at this one on the daily chart. Silver, you know, yesterday we had a big pop. Today we've got a bearish harami pattern. It's when you have a smaller red body within the, you know, following a large green body. Okay, so that's a bearish harami. There's a higher probability the price will drop if price drops tomorrow under these lows here. We can see it drop some more. It was down 1.86%. So we have to wait and see. You know, the news might change tomorrow morning, and it will change the whole outlook. That's the daily chart. Here's the weekly chart, still looking bullish. Okay. So you can see that's why these ETFs got the blue star, or blue flag. The rest, there's something off. Okay, let's go into those. And I'm not going to spend too much time on these because they are weak. GDXJ, gold miners. Tenkan-sen is under Kijun-sen. Price is under Kijun-sen. Chikou-span is under price. You can see that right there. So it's breaking down a little bit here. It showed the strength, but now it's starting to show a little weakness. Oil K still continuing to drop under the cloud. Copper X is also under the Kijun-sen right there. Tenkan-sen is under the Kijun-sen. That's not good. Chikou-span is under price right there. All right. The future cloud looks still good, but and you also have a bearish, what's called a bearish engulfing pattern right there. Okay, it's when you have a small bullish candle followed by a large red candle that engulfs it. Bearish engulfing. The opposite would be a bullish engulfing. Let me see if I can find one. I found one. It doesn't take long. Your eyes become trained to find these things very easily, like an eagle. All right, so here we have one, a bullish harami. And let me show you, let me just put a little square around it so you can see it. Right? Give me 1 second. There we go. It's these two candles right there. You get a bullish candle, especially when you see it after a drop, and then you get a small red candle that follows it but is within the body of the larger candle. That's a bullish harami pattern. Pretty cool. And it led to a move, didn't it? Look at that nice move up. So that's what you got to watch out for, is when you have all these multiple negative things, they all kind of add up, and they make the outlook look even weaker. And so then we have to reassess the situation, and certainly not add positions, okay, to something that is looking weak that might be dropping. You want to wait for that strength to come back in, and you need the Ichimoku to help guide you so that you know that, hey, this is okay. This thing is starting to show some strength on both the weekly and the daily time frame. You never want to add positions to a stock, basically add more money, or like average down, buying the stock while it's dropping. Bad idea. Bad idea, because you don't know when it's going to stop, folks. That's a really bad idea to average down. Average up. When price is looking really bullish, you can certainly buy more shares as it's moving up and everything looks bullish, and there's an uptrend and you're in a bull market, right? That makes more sense to me. Over here, XLC, you can see we're in a downward channel. This could be a long and extended drop. You never know. I would not be jumping in there. IBIT, Bitcoin, right now has been showing a lot of weakness. It's under the 5662 level, that prior low, going all the way back to June 23rd, 2025. So we're back at those levels, and we're below those levels from June of 2025 for the IBIT ETF. Now, this is a very volatile type instrument. It's not like stocks and ETFs. It moves a lot, okay? And, let me show you the weekly chart. So you can see we're still technically above the cloud. Here we had a pull back in January or so, and that lasted until April, and then it started to recover. So once the price gets, maybe comes to the cloud, maybe another 4% away from where we currently are on the weekly chart, we might see a bounce here. All right, let's look at SMH, semiconductor. So on the weekly chart, it looks good, even though we're down 3.01. Semiconductors are still holding up on the weekly chart. All right, so we're still bullish here, but on the daily, today, a big drop, 3%, and it got under both of the moving averages. Yesterday, we were above. That's how quickly things change. So that's not a good sign. GLD, gold, also dropped a little bit. We got a dark cloud cover pattern right here. Remember, we never really got we never got the Tenkan-sen above Kijun-sen, but we did show that strength there. But this would be a bad sign if this thing starts to drop, because then we'll have a lower high. So let's hope that we can maintain this uptrend with gold and we see some bullishness tomorrow. Real estate, XLRE, on the daily chart is still dropping, right? It's still inside this box, very long extended box that goes all the way back to like May. Okay, just back and forth, no direction really for real estate. XLY is looking kind of similar. That's consumer discretionary. down 2.5% inside the cloud, so stay out of that one. Utilities has been dropping some more. It looks like it might build a downward channel soon. Check this out. I don't know if you can see that. Whoops. Right there. Look at that trend line. Okay. So that's not a good sign. XLP, consumer staples, has been looking bad for a while. As I've said before, it's not a good idea to be jumping in here. XLK, technology. Okay, where it was starting to show some strength after that bullish hammer, after that pullback, got back up above the 10s and was starting to show some signals, signs of hope here. And now down 2.49, got back under. So that's not good. Again, this could potentially lead to like a head and shoulders pattern, and that's a negative pattern. It would be like sort of, you see that trend line right there, for example, okay? So let's say that, again, we build, here's the head, there's the shoulder, and then we create a lower high here as it's dropping, and it breaks through these support levels. That's not going to be good. But right now we're still in overall bullish territory. If you look at the weekly chart with XLK, we're holding on barely. It looks like we got slightly under the 9 period here, but tomorrow, if we get a bullish day, we can stay above, and that will take us into the next week. That's what I'd be concerned about with technology, because even, XLK is looking a little more bearish here. Industrials also looking bearish under the Tenkan-sen on the weekly chart, on the daily chart, also inside the cloud. Financials inside the cloud, right? Not good. We did break that channel, and we did stall at that, so we might get a bounce here on the daily. Here's the weekly chart. We'll see what happens with that. XHB Home Builders is still dropping a little bit into the cloud. XLB Materials is bouncing a little bit off the cloud there. I don't know if that's going to turn into anything. That's the weekly chart, and here's the daily. The daily doesn't look so great anymore. As you can see, it's been under the cloud for a little while here on the daily chart. So we've got a downward channel that's established, and it looks like we might start to drop some more now. Why? Because this is a bearish engulfing pattern. There's a hammer. I'm sorry. There's an inverse, they call that a shooting star type candle, and then you've got the bearish engulfing. That's not good on higher volume. Let's look at the direction movement index. The green line is moving down. The red line is moving up. We'll see what happens. And that's all for those. All right. And so that concludes this video. Now, a couple of things. If you guys are interested in becoming members, let me talk about that. Okay. So what you want to do essentially is come to my YouTube channel, Blue Cloud Trading. By the way, folks, guess what? We reached 25,000 subscribers. Pretty insane. Pretty insane. I love it. Thank you all for helping me reach this level. Couldn't do it without you. If you haven't subscribed yet and you've been watching these videos, it doesn't cost anything. Just hit that subscribe button. Hit the notification bell also, so that you know when my videos pop out. And then you'll be able to also find me in your subscription segment here. If you click on the set subscriptions, you'll be able to find my channel when I post a new one in there too. So strongly recommend that. Now, if you guys like the videos that I do here, I also do something special on the weekends where I go over my entire portfolio and I share all the trades that I placed throughout the week, and I go into a little bit more in depth about why I added the positions, why I closed out of positions. And all you need to do is click the join button for that right here, join. They make it easy here on YouTube. The membership is within YouTube. So you actually, I'm basically a YouTube partner, right? So they handle all the processing, the payments, and all that stuff. There are 3 different tiers that I've created. The Blue Cloud supporter level, where you can support the channel. And I do thank all of you who have done this, as well as the next level up, which is Blue Cloud Trader. This is when you get access to those exclusive member-only videos. Okay? And you can also request a stock or two each month to be analyzed on an upcoming episode. Blue Cloud Legend is the 3rd tier. Once you become a Blue Cloud Legend, you'll have access to those exclusive member-only videos. You can request up to 3 stocks or ETFs per month. There's some daily trade videos that I've recorded, And guess what? There's also daily trade updates. So before the market closes every day, usually around 2, sometime between 2 and 3 p.m., I usually update by submitting a post. So once you become a member, there'll be a new tab that pops up next to posts here, and it will show up like this, membership. In fact, if I can show you one that I made public this week earlier. I think it was on Monday that I made this public. Let me see if it's in here. Hold on one second. I'm not sure I want to show that. Wait, hold on. I want to make sure I don't show the wrong one. That's already, yeah, on Monday, I made a complimentary post so that you guys could see what legend level members see each day when I post them. Okay, so this is what it would look like. It will pop up in the membership level. Okay, but you can actually see this one too. If you click on posts, you'll be able to see this one so you can check it out. So, all right, it will just basically have the date. You click on the read more button. I don't know if you saw that, caught that. Always click this, and it tells you a little bit what happened that day, the stocks that I added, stocks that I closed out of, and then I also attach a screenshot. And this screenshot here is the screenshot of the Blue Cloud Buy Scanner. Okay, this is a proprietary scanner that I created in TC2000, the software that I use to help me identify stocks using the criteria that I look for on the daily and the weekly charts, right? To identify stocks. And it basically scans through 6,273. I don't know if you can see that right there. 6,273 items. So you can get, and it doesn't normally pop up this many, but that was a very bullish day. There's usually about, I don't know, 6, 7, 8, 10 stocks that pop up out of those 6,000. So it really does fine tune to find those optimal type companies that are looking very bullish on both the weekly and daily time frame, like I've said before. So that's an advantage right there. And then what's the other thing I wanted to say? Oh yeah, if you like the software that I use, the trading software, right next to this link, you'll see and 9 more links right here. If you click on that, you get a little synopsis of the channel, scroll down. These are the links right here. And you can get a $25 coupon for TC2000 right there. There's also some other links that you might want to check out depending on what you're interested in. If you click on this, it will bring you to this next page. You add your email in here. You can download the Windows software. Okay. The pricing is here. Software plans and data. And then this is the monthly charges that they have for different levels, basic, premium, and premium plus. Personally, if you're starting off, I would recommend the premium because you will be able to actually draw on the charts with the premium. That's important. You'll also have access to the Easy Scan Wizard and real-time scanning and sorting and most watched and trending stocks. You can see all the different things. You can also create alerts. All right, multi-monitor support. So if you have multiple monitors, you could use that. Under Premium Plus, you get some more things here. You get some real-time market pulse gauges. 1,000. You can track up to 1,000 stocks with alerts. And then there's some more information here about if you want real-time data feeds. Okay, and then they also have a brokerage service here. Okay, so why trade with TC2000? They're actually connected with Interactive Brokers, so all the orders are routed through IB Smart Routing. And if you've used Interactive Brokers, you're familiar with how reputable they are. So yeah, this is something you might want to check out. Guys, thank you very much for watching. Thanks for subscribing. Thank you for supporting the channel. I hope you all have a great rest of the night or day, and I'll catch you all in the next one.